All right, well, this is hard to believe, but it must be summer because I've been for a barbecue this morning, and it must be summer because we're doing our first Investor Circle interview. Welcome, Michael. For those people that don't know who you are, would you be kind enough to introduce yourself and tell us what you do?
Yes, hello everyone. I'm Michael McDowell. I'm the Ireland country manager and investor lead for SeedLegals. And if you don't know SeedLegals, we're a legal tech platform established to help founders get all their legal documentation for funding rounds, right from creating your first cap table, SEIS, EIS, advance assurance, right through all your funding docs, and then going to do R&D and options and everything on our platform. So they're there to help founders scale and grow.
And I'm a big fan of SeedLegals. Use it personally for a couple of my companies, and I think we're going to be using it for our fund as well. So great to have you here. And we obviously don't know each other very well, so it's good to get to know you through this process as well. Northern Ireland's where you live, right?
Yes, been based in Belfast. Grew up here, moved away, lived in Scotland and Australia and all other places, and then moved back a good 20 years ago. And it's a nice place to be based. You've got the rest of Ireland on your doorstep, nowhere's too far away, and you can be in the central London in 4 hours, as I tell people. So it is very accessible. And we also get to escape the 35 degrees heat to a much more calmer 25 degrees in the summer. So it's been lovely this summer, actually.
Yeah. Well, it's been a nice 26 on the beach already this morning here just in the UK. So must be pretty balmy elsewhere. So Northern Ireland's got a bit of an ecosystem though, right? So Boyd from Sapphire, who we deal with for our fund, he's based there as well. And the universities seem to be thriving as well. What is it about Northern Ireland that makes it so special?
Yeah, I think we've got a really strong, we've got a good university spin out, so Queen's University and University of Ulster. I think the spirit of innovation and creating things, taking responsibility and being your own boss is sort of quite strongly ingrained in Northern Ireland. We have an economy with a very, like in Tyrone and Armagh, you've got lots of heavy industry. And a lot of companies have sold from that, which has then led to new people coming through who want to reinvent those traditional businesses using new technology and doing new ways. And then through Belfast, where you have the universities, and we have Catalyst at the Science Park, Ormo Baths, which is founded by a number of exited entrepreneurs from around the world, and a really vibrant NatWest hub there as well. So if you're a founder and you want to create and build something, there's loads of support. There's places that you can go to. There's people who you can lean on who've got lots of experience and knowledge. And as I said, we're also so close to those UK and Irish markets that you can easily get across and do things. So it's a great place if you do want to create and build something.
Amazing. So you've obviously had a few careers and moves around before you got involved in SeedLegals. What brings you to this space? Were you an investor before? Were you in finance before? How does it work for you?
Yeah, I did remarkably boring jobs after I graduated. Sort of sales, commercial jobs in, I sold technical training. I then worked for a Scottish executive agency selling e-learning solutions. And I think I was on the edge of lots of innovation, lots of really interesting stuff, but never properly involved in it. And then went off to Australia for 6 months and had the most ridiculous, well, it wasn't ridiculous, it was a bit ridiculous. It was selling a window and PVC cleaning material, which was sold on UK shopping channels. So I went to Australia to try and get Australian shopping channels to stock and sell this product, which was invented in Northern Ireland, manufactured in China. Well, manufactured in China-ish, and then we wanted to get it to Australia. But the big selling point in the UK was that there was de-icer in it. So you can imagine having de-icer conversations in Australia. But that got me working for myself. So I came back, worked for a startup in the property sector, managed to get a little bit of an exit from that, and then got involved in the crowdfunding space. which was just emerging at that time. But I recognized that I'd been helping companies raise investment, and I was sick of running around with PDFs of pitch decks, having coffees with investors. And I felt like this new way of sharing deal information, getting access to investors in more interesting and difficult places, and broadening rounds really became, I found that really, really interesting, and did a lot of consultancy work around that until I was approached by SeedLegals. And it married into that sort of thinking, the whole thinking of how do we make it easier for founders to connect with the right investors, but also close out funding rounds in a really neat, tidy, process-driven way. Because I think we'd all experience long, difficult funding rounds with well-meaning and great lawyers, but just who lawyered the life out of every deal. What we want was just process, get these
and
things
those bills
done.
can get quite considerable, can't they? You know, when the bill looks heavy next to the investment, it's 1%, I think, was the benchmark I was given when I first started. But when you see anything north of that, it starts to feel painful.
But that's it. And you also, I think while I was going through that, you started to meet founders who were brilliant at what they did, but they didn't have the base knowledge. Therefore, they were making mistakes, which then became very expensive. So, but actually, just before I started a few years before I started SeedLegals, I found myself with an investor here in Northern Ireland called Jenny Irvine and an old friend, Marty Neal, and we set up an accelerator called Raise Ventures. And the thinking behind that was to try and help really early stage founders get really good solid foundation, do really quite a boring accelerator as we saw it. We wanted to explain we wanted to explain to them what a cap table was. We wanted people to know what a cap table was, what a term sheet would look like. We wanted to make sure that they were properly incorporated in company's house. We wanted to make sure that they had proper foundations. So when they took on their funding rounds, they knew, and we obviously did loads of stuff around product and customers and everything, but we got really granular and boring about stuff as well. And I think that boring aspect then led into the SeedLegals stuff, where try and take all the boring stuff away from founders.
What were the stats like on Raise Ventures? Did you run many cohorts or anything?
Yeah. We I think with over 30 companies came through the program, and we have 6 who are doing pretty well at the minute, with a few high flyers. I won't name names because they're all brilliant, and you don't want to pick one of your favorite kids, but they are. I think it's been like really like satisfying to see how well all those founders have done, and all of them for the grit, the determination, and the resilience that they've all shown, the successful ones, and also a lot of respect for the ones who got so far and realized it wasn't going to be a thing they wanted to do and stepped away. I think that has to be celebrated as much as anything else.
That's a hard decision, right? Especially if you've invested weeks, months, years of your life into something, and then you make this. Somebody's pointing out basically it's not going to work. How do you make that decision?
It just takes an incredible level of it's a ridiculous level of self-confidence and maturity. I was talking to a fund manager yesterday, actually, and he told him that one of their companies, while they have, I think, like 18 months of runway, they have the cash. They did a funding round, but they've been talking to customers and they realize there's no market for the thing that they're building. Therefore, rather than just keep going until the runway runs out, they're going to return a little bit of cash to some investors. They're going to help others get loss relief from their SEIS and EIS, and they're going to shut up shop and then take some time and come back with something new. And like both myself and the fund manager going like, that's a founder we want to keep an eye on.
Yeah, he's someone amazing
who he's going to come back with something bigger, better. And it just takes, I think it's that confidence piece. And we need, I think it's a UK trait, an Irish trait as well. We still don't embrace and celebrate failure like the Americans do. That's something we really need to start doing, I think. Like you must have found that with your accelerator and your different programs as well. You must have had to put the odd arm around the shoulder.
Absolutely. And when I first started this stuff, when we were doing things in Bangalore, there was a startup there who did quite famously give money back to the VC fund that invested in them. And they said, we worked out there wasn't a future for this. And rather than burn the last 500K, we're going to give it back to you and do the similar, take a break and do something else. And it really was just, there were two camps on that. Nobody was ambivalent about that. Some people praised them to the roof and the others just lambasted them in the press. And they were like, this is insane. Like, you've got the VC money, you should just carry on. You don't know it's going to fail because you don't know the market, right? That's the point of the VC money. You're supposed to be trying out this thing and they're happy to lose it all. And it really was like split points on that as a decision. I have always erred on the side of, well, if you can see the future or you've given up internally and decided like you don't have the juice for this anymore, then it's the fair thing to do is to give the money back and let them redeploy it to somebody else, because they're not going to distribute it back to the LPs. They're going to go and put it into another idea.
Yeah, exactly. And that could be yours in 18 months' time, like who knows? So yeah.
Absolutely. So SeedLegals does a pretty awesome job in the UK, right? I mean, what's the stats that you talk about nowadays?
Oh, 60% of all EIS advanced assurances come through SeedLegal. I was actually chatting about that today. I think there's 3,000 founders a year will be raising money in some way or other through our platform, whether that's funding rounds, using Seedfast advanced subscription agreements, or convertible loan notes. So we have a big chunk of the UK startup ecosystem and market with that nice, so most founders, we would like to think, will come and check us out when they're starting to get going and doing what they do. And we love it even if they're using our information and our guidance notes and all those great tools, because we want them to be as well educated as they possibly can. And it's a loss to us if they go off and use someone else, but if they've used some of our documents, have learned something before they go there, hopefully they'll still get a good outcome of what they're trying to do.
I mean, we at Canopy have our own SEIS fundraising course, which people can take as a one-off when they're getting ready. And we use a number of your different articles and stuff as additional information on that course and point them over to the site and stuff, because it's up to date, it's relevant, it's accurate, it's useful. It's like it's a very informative section.
Yeah, and we've just launched some new this one. Yeah, this is 20 minutes into the conversation, my first mention of AI. This must be a record on any podcast or webinar these days. But we are using lots of new tools to integrate our knowledge base service with Claude. So when you use our help function, and I'm probably describing this really badly because it's only gone out the door a few weeks, so we're still learning how it works. So I'm learning how to describe it.
I won't quote
you. You get the information from our knowledge base, from all the articles that we have prepared, and then they get linked in also to Claude, finding all the relevant articles and documentation from HMRC and Companies House as well. So you get the actual Companies House guidance or HMRC guidance, and then some of our articles linking in between that. And then it can also now, with our MCP server, check what you've already uploaded onto our platform regarding your company as well. So it can give you an answer based on where your company is and what all the other stuff does. Now, I'll apologize for the most clunky explanation of something I don't 100% fully understand. And Mr. Rose, if you're watching this, apologies. But I think everything's getting really nicely integrated to make sure that your decision making on what you do with and for your business is based on the right up-to-date information and what you've got going on under the bonnet of your business. So it's quite exciting.
No, it's very helpful, isn't it? Because one of the things that founders have said to me in the past is they love like the simplicity of using SeedLegals and stuff, but when they get stuck, it's like, oh, who do I speak to now? And there's like this little gap, and maybe that sort of Claude type thing really, because it's got your context and it's got the information that could really navigate that for them. I like that.
it should go through it, and then we still have loads of people in the background as well. So if anyone ever gets stuck and can't get through to somebody, contact me, and I'll get them someone really quickly. So we can always, yeah, we're still a pretty much people first business. Yeah, we find that really important.
I mentioned at the start that we're going to be using SeedLegals for our fund. Like, maybe you could explain to folks how that actually works and the particular bits that we like in terms of the connection to a founder who's on SeedLegals and then the fund that's on SeedLegals as well.
Yeah, well, I think it's what the fund can do is create their term sheet, which is usually pretty much standard for most funds investing into the companies, and then that can be shared straight through from the platform. The founder then can receive that, and there's an opportunity for the founder then to red pen or make comments on anything that they're not necessarily happy with. Then you can have a bit of a negotiation around those areas, which is often more an explanation from the fund why that particular point is there and why it's nothing to worry about. Would that be a fair comment, Stuart?
With the SEIS stuff, there's a lot of cookie cutter, right? There's a lot that just can't be changed. There's some some discretion, but there's some bits that just don't move.
Exactly. So you can have that discussion, and then once everyone's happy, it can be signed on the platform. Then the founder will have their cap table updated, so it'll show the new investors coming on there. And so when you guys invest, you usually come in with co-investors from different places.
Yeah, we will be. The first 10 checks we're writing are 100K, so there'll be other investors coming in alongside that.
Yeah, so you can then share out, if you guys are leading, you can then share out that term sheet to the other investors as well to see if they want to come in on the same terms, and it can be negotiated, and then it can all be done there on the platform. So what it really does is give visibility to everyone. There's no, like, the thing that everybody wants to avoid when you're trying to close any deal of any sort, I'm sure everyone realizes this, is horrible email chains of complicated negotiation and different version 12s coming through as well. If you can keep everything tidy in one place, it just makes the negotiation quicker and cleaner and easier to track. And also then when you, particularly for the SEIS and EIS, when you want to come around then to do your compliance, to make sure that all the investors get their appropriate tax reliefs, all the documentation can be then done through the platform as well. And our guys can review and check everything to make sure it's been done properly. So all those certificates then can be shared out from there as well. Because I think that's it's one of those awkward things that funds find chasing founders to get bits of paper and different things signed, and investors are chasing funds, and everyone's chasing everyone. We can just keep it all nice and tidy in one place. So it doesn't distract. Because I think, sure, you must also find a lot of this admin and a lot of this stuff is being done at exactly the same inflection point for the founder who are trying to onboard their first or their biggest enterprise customer, or other things that are going on. And then the founder gets an email about SEIS compliance, and you can just feel their heart sink from 50 miles away.
I mean, any first-time founder who's watching this, they might think, oh, this sounds like a great idea, and I understand the concept and stuff, but I'm probably only going to do one raise, and what does it really matter to me? But I can say, like, when I went through the raise with Supo, with Yuri, and that was the first time we'd used this SeedLegals integration piece and hatch with the investors, and we were on the platform and we were doing stuff, and I sort of blinked and we'd done it, and I was kind of like, hang on a minute, this is normally incredibly painful. I'm expecting like 6 weeks of back and forth and silliness and track change Word documents and all sorts of things, and we're dropping and we're clicking and we're updating and we're done, and I'm like, this is amazing. and it wasn't my first rodeo, so I could really see the difference, and not just in how long it took or didn't take, but it was the cognitive load, what it hadn't taken away from you. Because funding should be about moving forward, not getting stuck in this admin loop where you needed a CFO to be on tap to actually help you through it, or an extra legal fee to sort it out. You just want to get the money in and get going. Sure, if you're in the 20 million raise category, okay, we can be a bit more nuanced. But when you're in the 250K, just trying to get started, but you just want to get it done, right?
Exactly, because you need that money, and because you have that maybe developer standing by ready to come on board to get going on that next iteration of the thing that you're trying to build. And the only barrier that's stopping to do that is having the cash to be able to do it. And that's the most frustrating stage for any founder, is you can see the prize, but you need to build these things, do these things, and then you can start taking advantage of it. So what we wanted is make sure that we are not a difficult barrier for that. It's allowing the founders to do what they want to do.
I think the other thing we recognise inside Canopy is that the SEIS and EIS tax measurements are proving to be some of the best liquidity areas in the world. Like, it's one of the best systems for early stage fundraising, and tools like SeedLegals, and there are others like Founder Catalyst and stuff. These all help you to do it efficiently, which if you're coming from another country to raise into the UK, that's a massive thing as well. You don't want to try and go to this education piece, let the platform do the lifting.
Yeah, I thought that's exactly it. I think we've launched in the States as well. So we've got Anthony Rose spends a good chunk of his time in New York, and we've a guy over there. So, and that's sort of been the mission in the States, weirdly, is smoothing out early incorporation, smoothing out the right type of company you incorporate as, making sure that you do your Delaware flip in the most appropriate way, making sure that if you're using safes, they're done in an appropriate way. I think it's a slow burn over there, because we're doing it in that process-driven way. Because it's a great example of a market where there's an assumption that you'll launch quickly, you'll get everything wrong, you'll string everyone along until you're in a position where you can pay for the legals to fix everything, and then go for your next funding round. And we sort of think there might be a better way. So that's what we're aiming for.
I remember a great moment when I met my first lawyer in the US, and I was a complete noob for trading in the US, and I've been sent along to a trusted attorney, and we have the first meeting, and as I arrive, he shakes my hand warmly, and he gives me 2 business cards. And I went to give him one back, and he was like, no, one's for you and one's for the guy you refer me to after this meeting. And I was like, this is a whole different ballgame.
I like that, yeah. I was going to say I might try that. I can just imagine a startup founder in Belfast, how they'd look at me. But yeah, I like that.
See what happens. Maybe you get a pint out of it. I don't know. So there's always a lot happening on SeedLegals. I noticed it doesn't stand still as a platform. It's always iterating. Even the fun thing, as we went through it with Super, I didn't even know it existed at the point where Hatch sent us over the link and stuff. And I was, and obviously we've now built into that as well. What is next on the roadmap? Is there something else already planned?
Yeah, well, I think we're very excited about. We're sort of continuing on that founder process, and where we always feel that we have sort of stopped is the actual connection then with investors, and trying to bring the whole ecosystem together. Because as I described earlier, you can do everything up until that point, and then off you go and find an investor. And then I think, sure, as you've explained, you've used the platform, so loads of investors have come on to sign advanced subscription agreements, have come on to sign term sheets, to come on and use the platform, and often founders go on to be investors. So what we want to be able to do is then give founders the opportunity to share their opportunity with the investment community through our platform. So we're working with a company called Wealth Kernel. So we're FCA authorized, and we're building out the platform to do that. So it's not quite ready to go live, but the one thing that we can do at this stage is help founders meet regulated funds and syndicates and companies that invest. So what we're doing is we're sort of launching this slightly in stealth mode, and we'll work with, so founders will be invited to submit their pitch, a video of what they're a video of their pitch. They'll have to have a full data room all ready to go, and we'll review that. And if we think we can help in this sort of gradual move, we'll work with them and then start introducing the different funds. So that's what the rest of this year is going to be about, which is very exciting. That's something I'm involved in. Then other things that we're doing, integrating loads of AI tools through the platform, to make sure that our knowledge base is then fully supported by other information at HMRC and Companies House to make sure that our knowledge base is up to date, making sure that when people are using our help functions, it understands what their SeedLegals account looks like. So making sure that any advice and guidance we give is based on how their cap table looks. So I think an example that was used was you could go on and suggest some terms of an investment round and ask how that would look on a company's cap table. And then we're looking back and say, well, that would leave you with X percentage left in the company. This is what you're holding in your position would look like. So we're just trying to integrate loads of AI tools through the platform to make it as functional and as good as we can. I'm only hearing about these AI things at the minute, and I'm probably not the most technically brilliant person in the world. So I'm learning loads as well. And it's fascinating to see how these things can work. And because like AI, or Stuart, you must get AI first decks on an hourly basis at the minute of people recreating things and building things.
Yeah, there's a lot of stuff floating around that's got AI written on it for sure. And we're building a lot of our own stuff internally with Canopy as well. So one of the things we do is we take all the interviews we've ever done with investors and we put them into a little project space. And then whenever we're reviewing decks for people within programs, we review it against those transcripts and then pull out using the AI, basically the recommendations. If you were going to go and visit this investor and you wanted them to raise, this is how you would change your deck and update it and everything. And we can now do that in literally minutes rather than the sort of long form discussions it used to take to go through that. And we've sort of decanted all of our knowledge into a base, which means that other people in the team can do that as well. It doesn't always have to be me or Pedro or somebody who's met all the investors doing that review, which is amazing, to be honest. We literally couldn't do this 4 years ago, and now we can do it on tap.
I think that's fantastic, and I think that then will help them get through the Sure Valley Ventures. I'm not sure if you know those guys.
No.
They have now an AI first onboarding process for all new investments that they do. So your deck is just taken through initial review, then it goes to the investment manager with the key points of what's missing. They can then go back and then it can go through. And I think they're almost making noises that they feel they can almost get things right through the investment committee untouched by one of the investment team. So but then I always feel that takes away the most important decision that all investors have to make, and it's the founder. Do we get on? Do we like the founder? What's that connection like? So I don't think all these tools just help speed things up, but it comes down to the individuals, doesn't it? The people.
Yeah, I like to think the tools take away the barriers that maybe persisted before and enable you to have more time dwelling on the important stuff, right? So if I take the use case example I mentioned before in Canopy, you can now really clearly see there are 2 rather than 20 investors that you should be speaking to because you really don't fit with them. So now we can go into how do we approach that particular investor? What do they really want? How are we going to nuance this for them? How are we going to present ourselves and how authentically will we match? And that's the key bit that we always work with the founders the longest on, is for them to present themselves authentically as themselves, and but do it in a way that is presented and presentable for the right investor. So we know sometimes they're not going to be a good fit for certain investors on the personality. They're just literally not going to work together well for 7 to 10 years. So we're excluding on that basis alone, but we can have that proper conversation because we've not had to wade through all the other stuff. We've just taken that lift away.
Yeah. No, it's well.
We'll see where it all goes, right?
And it's exciting as well. And you're not describing a complete revolution or a complete change of how an industry works or anything. It's using these tools to make things more efficient. And that's, I think, what a lot of people are missing on a lot of the AI tools and things that they're doing. It's more simple process-driven stuff, which is where the real value lies. And I know it's sad to say, but if you can introduce a new tool to an industry that reduces the head count by 20%, then there's going to be real value for that business to use your tool. Now it's sad for those people and you describe it in that way, but I think that's how technology's always worked, hasn't it? I'm sure there's
it changes things, right? It takes away what is in effect some waste from the process. It didn't need to be like that, and then that gets turned into something more useful elsewhere. That time available now, that manpower, that brain space gets used for something more important now, rather than wasted on cycles like Cox. It's, we'll see. I think the biggest thing we're concerned about and that we don't know how to map is how it's going to change exits and what that looks like. But today we're talking about investment, which is slightly different. But
well, I think one thing that it's impacting, and that was the conversation I had with a fund manager yesterday, was early money is being seen to be much easier to get at the minute. So when you're seed round and early rounds, to get off the ground, there's money available out there. But the expectations now that if you've taken in £500,000, have you built something and have you onboarded customers and have you shown some traction and proper growth when you go out to the market then to maybe do a seed or a Series A, depending on which market you're talking about. And there's that expectation.
You can do a lot with that money, right? You can do a lot.
Exactly. And if you haven't got loads of customers using your thing, or if you're a deep tech or if you're a med tech, if you're not then up at maybe testing levels or trialing or something like that, if you're not showing that traction with that money that you've received, it's incredibly hard to get that next round of funding at the minute, which I think puts a lot of pressure on the founders, that they do have to move at pace and they have to be really efficient and effective with the money that they have and keep a real eye and a prioritization on revenue growth and selling, which it's selling's back, baby. Like it's
No, it is, right? So the blockage for a long time used to be, do you have the technical ability to do stuff? And where do you find that from? And how do you raise money to afford that talent? Doing the deeper tech stuff still requires that, but there's now such a high watermark, so much you can achieve as a non-technical founder with the AI tools, and with a semi-technical founder, you can achieve an incredible amount. And we got a couple of great examples in the last 6 months in Canopy where people have freed themselves up by just using things like Replete and using things like Lovable and using things like Claude to create things they didn't believe they could do, to the point where they're putting it in people's hands, and it's really quite complicated stuff now. And yes, they've got to go to a CTO now, but as a solo founder and a non-technical founder, they've gone so far down the road. It's amazing. It's what we always hoped would exist, and there it is.
Oh, it really is, and it's glorious to see, and I suppose that's where are we going to see a lot of exits more on strategic purchases by big organizations who just want to buy these tools in and use them and not let anyone else use them? Is that where the future lies, or are we going to start seeing big conglomerates of AI built products all under one roof? Like, it's, who knows what that's all going to look like? Do you have any sense?
Yeah. We've been thinking about it a lot, and genuinely we're not sure. Like, listening to some of the narrative from the West Coast, where they tend to be a little bit more ahead in that sort of what's the burning head of the comet look like stuff. There's a lot of distrust around things being built inside AI for enterprise, how much knowledge is being given away by going to the LLMs, and what is it in terms of secret source for companies that they've got to hold on to. Life sciences is one of the more recent ones that's had a lot around that. I think Claude have been trying to build a life science instance, like they do Claude Code and Claude co-work and stuff. We're trying to do a life sciences, and that sparked a lot of interest around where's my intellectual property gone and what do I actually have if I'm a life sciences firm that have given it to Claude, etc. So there's a lot in there, and that puts back more walled gardens than the more openness of how much things can flow backwards and forwards. And that's almost better for exits than where things were heading maybe 6 months ago. But we'll see. It's going to be an interesting world. I don't think anybody knows yet. We're going to find out.
I think we'll just have to take a deep breath. I think the mumbles I hear around the place as well is, yeah, what happens when Claude, Lovable, and all these guys start tweaking up the subscription fees and the cost of using their tools and all this sort of stuff as well. I think that's the other thing that we're starting to have slight concerns about as well, around if people are completely reliant on this, when do the models now start to look a little bit disjointed in terms of cost and return? Because how can they afford to keep building the servers? How can they afford to fill in the clouds? So it's going to be interesting to see how that side of the things actually progresses.
Yeah, and there was a quote in one of the famous podcasts the other day, and I don't do it justice, but he said something to the equivalent of, the founder of Anthropic has raised $120 billion. You better believe he's chasing sales targets, right? So if you think it's free now, it's not going to be free for long. And if you think it was affordable before, it probably won't be for long, because he's got to make a good $1 billion a year on top of what he did last year just to keep going. So, and it's a fair point, right? It's a fair point.
Well, absolutely. Yeah, it's not a charity, so but it'll be interesting.
So it's been great to have you. Thank you so much for sharing your wisdom and the insights around SeedLegals. As I mentioned before, we love the platform, and it does a lot of good for founders in our community. So thank you for everything that SeedLegals brings. What is your best advice, having seen so many founders go through, for first-time founders that are starting now, and if they're watching this and they're thinking about raising investment?
It's incredibly boring, but have a good close eye and understanding of your cap table. Don't give away equity to early staff members lightly. Use option schemes, and get yourself really well organized before you even start talking to investors. Have a really good solid data room. Have a really clear vision of what it is you're hoping to do and hoping to achieve. So when you then start talking to investors, you can move at their pace, because they don't have much patience. And on that same embrace, listen to, and take the no's, but don't get bogged down when investors say no to you, and there'll be a very good reason. And don't take it personally, because I know a lot of amazing people who have set up businesses who have been successful in everything they've ever done, and now people start suddenly saying no to them, and they take it very personally. It's not you, it's the other thing. So yeah, stay strong in yourself.
Thank you for that. That's good advice. It's very hard to remember in the moment, but it's good advice. Thank you for that.
Yeah, exactly.
It's been great to have you here, and I look forward to meeting you in person when we finally get our Northern Ireland visit in the fall. Come on over to see Boyd and the team at Sapphire, and make a point of looking you up and popping out for dinner or something while we're there.
That would be absolutely brilliant. Really look forward to that. And thank you very much for having me. I really enjoyed it, and I hope I didn't ramble too incoherently, particularly when trying to describe SeedLegals. Particularly trying to describe SeedLegals' new AI integration. Yeah, it's something like that. But come on to our platform and it'll explain it all beautifully, and it'll all become perfectly clear. So yeah, thanks for having me. Really enjoyed it. Thank you.
Brilliant. Thanks, Mike.
Cheers. Bye.